Awesome. Well, thanks, Andrey, for coming on and answering my emails and getting getting on the podcast.
Yep.
It was good to chat about also how we met. Some of those networking events, and I think there's probably a lot of people who are watching this who probably are trying to go to a lot of those networking events too to try to get their head around property development, investing, and I think there's probably one on every street corner these days. Every weekend there's some sort of event somewhere where you have to learn about property developing. But hopefully people who watch this can sort of maybe get some of that information from you. And that's why I got you on, because I know you've got a lot of experience in this area, and it's something that I'm noticing. I don't know if you are, but I'm noticing a lot of people are looking to property develop as opposed to property invest, which is usually sort of that build to hold or buy to hold. A lot of people sort of say maybe there's more money to be made in buying to sell or develop to sell. Are you seeing sort of a similar thing as well?
I'll be looking from another perspective. Am I going to give the control away, or I'm going to take control? But if you give a control away, then you feel good. It's just someone's looking after you. Sometimes it could be market or time. You put your eggs in the basket of time. Yeah. But once you decide to develop, then you take control, and then the success of the project is on you. Yeah. And some people afraid of that responsibility.
Yeah.
And that's what holding them back. Even though they've got financial capacity to do it, they've got the mindset. No, not the mindset, the skill set to do it, but the mindset is holding them back because responsibility it's got the big weight on your shoulders.
Do you feel like not only is it stopping some people from maybe going down that development path, but do you also feel like maybe development's not for everyone? maybe even if you do have the skill set, if you don't have that mindset to sort of take over a whole project and do the numbers and work that out and sort of take that risk, do you think maybe it's just there's some people need to face reality that maybe development's not for them, or do you think development is something that everyone can get involved if they really wanted to?
Look, if we look from the human personality, there are people who are leaders. They start, they start their startups, every year, but never in position to finish them. They really lack of consistency. Mm-hmm. There are some people would, market your project, until they're dead, and they'll get amazing results because they can sell. They can sell anything. They can sell their mum, they're capable of doing it. There are people who do really good at what they're doing. If they instruct them to do something, they will absolutely get it done. And there are people who setting up the processes. They're not really good at doing the one thing over and over again. They're quite creative, but at the same time, they're not at the position when they're not the start-uppers. It's hard for them to, how to say that, the mindset is to take responsibilities to start something.
Yeah.
Is, a bit of a challenge.
Yeah.
So I guess it's just I'm that person who actually sets the systems. So I'm happy to do repeatable things for a while, but then I want to do something creative and then connect, daily work with, create a system or improve the system. That's the background I'm coming from. I'm really bad at sales. Really bad. I suck at sales. I can't sell anything. Come to a meeting and I'm thinking, what are they going to think about it? That I'm going to sell them? I don't want to sell anything. It was just,
Yeah, that's interesting. Yeah, that's interesting. But I guess the good thing is that you, by taking control, people in your team that need to do the selling can do it, and you sort of make sure that you can sort of pick that. And like you said, you set up the system and the process. Now, I don't want to. We're sort of getting straight into the questions. I actually do want to learn a bit more about you first before we get into the questions about property developing. Tell us who you are first. Tell us sort of your story. You can tell personal and business, whatever sort of floats your boat.
Well, I'm coming from a background when a handshake is important. You can be beaten for not, holding your word, not just, abused to this, you actually get bitten, and respect will leave you the moment you don't. I'm coming from background when paperwork comes second, handshake
Hmm.
comes first.
Yeah.
So, and you know that's my, the cultural background. From other perspectives, is that I'm coming from a um, town planning degree,
Okay. Yeah.
surveying. So I have been in the construction for all my life, but more like a consultant,
Yeah.
either as a surveyor or town planner, or from the council side,
Both
or
really
from
good
the
skills to
yeah,
have
or
in.
from the private
Yeah.
side. So I
Mm.
can see how it works, and what goals a government pursues, and what goals private sector pursues, and how they interact with each other. Yeah. So for me, get into the I haven't really left development. It's like
Hmm.
I've always been in the property
Always been
development,
there. Yeah.
but being more like a consultant on the lower level.
Hmm.
So the transition for me wasn't that difficult.
Okay.
So
Now, do
yeah.
you still do town like? Do you still do town planning
No,
and surveying and stuff like this, or that's your sort of moved on from that now? That's sort of just your background.
yeah, I moved on from that. I
Yeah.
think I don't remember which year is that. That was before COVID.
Yeah.
So yeah, I started as doing one or two projects on the site, and eventually it took so much time that I wasn't able to find time to do my day job. And it
Hmm.
wasn't like, I didn't celebrate leaving my job, because I never planned, like in my head that I'm tearing my contract apart and burning it with the light, like nothing like that. It's
Yeah.
just
Yeah.
it was so natural that I just one day called my director and say, look, I can't perform my duties anymore. So
Hmm.
if you want to, average results from me, then we can continue for a little bit, and then it will degrade over time. Or
Yeah.
if you want to, I would prefer to leave now and save my name, uh, in the company and with my clients, as
Yeah.
a excellent deliver. And we agreed on that. So
Yeah. Fair enough. Now, is that was there something that spurred that on? Was there something that sparked you wanting to move out of your job and have that conversation with the director?
basically consulting builders and developers on their
Hmm.
development, and then
Okay.
seeing that through, and then checking how much they bought the land, how much the unit's selling for, and then just adding up the numbers. It just blew
Hmm.
my mind. But
Yeah.
as average mum and dad would add the numbers, their numbers are not correct, because they're
Mm.
missing half of the half of the costs most
Yeah.
of the
Yeah.
time. They're like,
Yeah.
"Oh, he bought it for 1 million. He sold two for 1 million each. So he made the million."
He may, yeah, yeah, and they miss all
Yeah,
the professional fees, council fees, all the consultation
interest, stamp
fees. Yeah,
duty, yeah. So all
yeah,
those fees, and then it's like, yeah, okay.
yeah. No,
So
fair enough. And so you started from that point, started going into doing your own developing.
yeah, that's right.
Um, Now, maybe I'm jumping ahead in the history of Andre, but you also run a business now as well, doing buyers agency. Explain that a little bit. What type of buyers agency
Yeah,
you do?
look, the Bay Bias Agency is the offspring from my property development business.
Okay.
It just, as we start small, we learn, and then we go into bigger things. And as you go into bigger things, you kind of don't want the small things anymore.
Hmm.
But those small things, they still come your way. So you have
Yeah.
a choice whether to pass it on or just ignore it.
Yeah.
So I chose to pass it on
Okay.
for a fee.
Yeah.
That's basically that's what buyer's agency called.
Yeah. Fair enough. Yeah. Pass it
Because
on for a fee.
yeah, because some people say, oh, buyer's agency is something that is, I have to do this and that. I don't have to do much.
Mm.
It's just I've got the connections, and then moved on from small things, moved into the medium size, and those small things no interest to me. But for the people who are just starting out, those small things, that's what they can afford. That's what their financial capacity is for. So,
Yeah.
yep.
Yeah. No, absolutely. Now, I you sort of mentioned it a little bit earlier on this podcast, but I sort of want to go back to it. And is that a lot of most Australians, most people, well, I do, most of my clients are looking to sort of buy and hold, and it's buy an investment property. So they usually have an own occupied property, and they want to sort of buy an investment property and hold. And you sort of got your mum and dad investors and stuff. But I'm starting to see more and more people sort of say, hey, maybe they've run the figures similar to you, even though the figures might not be right. And they've thought maybe there's more money to be made in property development. So I just wanted to ask, what appealed to you in the property development side? And I know you mentioned sort of having more control over sort of letting people do it. But I mean, in the early days when you were sort of looking at different things, a lot of people want to sort of build their wealth and hold on to these assets, and then at retirement they've got X amount of wealth. Whereas in your case, you're building them and then selling them off for a profit. So
I was far off from having massive dreams or this and that. Like me and my wife, we were renting, so and we talked to each other and said if we want to bring children, we want to bring that in our own house. So and we look at the affordability. That was 2013 of what we could do with what we had, and then we just realized that it's going to take how many years, a decade, to save.
Save money
without having any relatives. It's you on your own. You either make it or someone's going to break it. So, so you don't have much choice. You're just between the rock and the hard place.
Especially in like a Sydney market where it's the property's so inflated. So
yeah. So from that perspective, I just thought I have to take that responsibility. I have to take that move. And we start to look for the project and. Yeah, so for me, it wasn't about big dreams, being rich, yachts, holidays. No, for me, it was the urge for me was to bring the children not into the sales twice a year, not into the sales and Target or Kmart twice a year, and have that life of constant getting by. I'll just. Because we all know, you can be, very comfortable living together, like as a couple and save for the holidays and this and that. Once kids come in, half of your income gone, and then a quarter of your expenses goes up. So you're literally, if you compare you to the quarter of what you had before.
Yeah.
So.
Yeah, 100%.
Yeah. So that was my urge.
Yeah,
it's just to simply expand the family, and I'm coming from a very humble family, so for me to be happy, I don't need much, just on holidays, just a standard, just go on holidays, have a not a spacious, just enough space in your home for. Have bedroom for everyone, or maybe just one bedroom for two kids. Nothing fancy. The car. Not
doesn't
nothing.
Have to be a Ferrari.
To be honest, I think I'm not that kind of person. I think even though if I do have the money, I would never spend money on this because I feel embarrassed because if I buy a Ferrari, I would feel embarrassed because I'll just.
I know
my values doesn't align with these brands.
Yeah, I'm sort of very privileged to have met, especially in my line of work, and you've probably seen the same. Met some people who've had a lot of success in business, and what I find is very common, and it's despite what social media might show you, that a lot of these people are humble spenders or sort of frugal with their money. And I know we're so used to Instagram and social media showing us these lavish lifestyles of celebrities or people who are sort of claiming to be rich. Many people who are rich, but what I've seen is some of the most successful people I know are very frugal with their money and very, very modest in their means. And they spend money when they need to, and they spend money on family and things that are important to them and not on sort of lavish lifestyles. And there's probably wisdom in that. There's probably wisdom in thinking about, okay, I'm not going to waste, X amount of money and we're going to use this towards things that are important to me, as opposed to, maybe a Ferrari that's going to lose value almost by half by the end of the year type of thing. So
Yeah.
I think
But
that's important.
I'll be thinking we look at two types of the people who are wealthy and people who are rich. I guess for some people, it's like you go to supermarket, you want to buy, a premium carrot, or you want to buy discount carrot. For
Yeah,
them, buying Ferrari or Porsche, that would be this category.
yeah,
They're not
yeah,
even thinking about where some people should I buy premium meat, or
yeah,
I can just go with sausages today. They don't
yeah.
think this way. For them, when you go to that level, Ferrari, it's not as something you would think about it. It was just, look, it's just,
It's
do I buy
just
a carrot today, or just buy,
yeah.
what
I guess
else?
at those levels, yeah. No, you're right. You're right. Now, you did mention talking about your first project. I'm really curious because a lot of people struggle to get into the property development scene. Now, you do come from sort of an experienced background, being town planner and surveyor, and that's, like I mentioned, really important skills to have. Um, but what was your first project? And what were some of the lessons you learned from that first project, good and bad lessons?
Yeah. Look, it took me. The thing is, once you come from a certain industry, it's good and it's bad. Every personality has a shadow. So for me, coming from that, town planning and the surveying background, he's actually got, comes with the shadow of being analysis paralysis. So
Mm-hmm.
you start to look at what you know, and property development is what I found recently. It's not what you know and who you know and who can help you, because it's so broad. It's like
Mm-hmm.
this is massive project. It's you bringing something out of the ground. It
Yeah.
doesn't matter what speciality you have. At the end of the day, project management skills, I think, it's the most valuable skills.
Mm-hmm.
It's like being a surveyor. What do you cover? Cover the yield. And a bit of land constraints. Yeah, you're coming with with the good chunk of it. Getting rid of these questions early in the piece. But in saying that, I think project management is the most important. And for me, when I was looking for my first project, I spent about 6 months to find one, because I was
Yeah.
looking
Right.
from the town planning perspective, how it's going to work. I can do this, I can do
Yeah.
this, and then
Maybe overthinking it a bit.
yeah, and then I
Yeah.
left the financial bit of it to the end,
Yeah.
and I hardly ever was getting to that financial part of it, because I was looking for the perfect site, and then now looking backward, I think if you go to all the courses that are out there, they're giving you 90% information, and then that's really good, but the 10% information, that's what actually makes you developer.
Yeah. Okay.
Yeah,
Yeah.
so if I can maybe just open up those 10% to someone else's, everything is important, but numbers come first.
Mm-hmm.
So if someone would look at something, people say, oh, look at the area, look at the history, what's the government investments, what's the roads planning for this area, what's population growth, what's supply and demand,
Mm-hmm.
how many days in the market, how many DAs in the ground, this and that. It's all good, but we're talking about fundamentals for investment. Yeah, at the end of the day, your buyers are investors, or maybe not. So if you're delivering investor product that based on yield, obviously your buyers savvy investors, so you have to do that research. But
Yeah.
once you build something for owner occupier, these people just want something in the good areas, that they feel comfortable. Can go to the cafe and then go to the
Yeah.
beach, or to some recreation
School or
areas.
something like that.
Yeah,
Yeah.
that's right. So you need to start with the numbers. Just
Mm-hmm.
to say, if you don't have really idea about the yield, what it can do, you can just say, let's assume I can do 3 on this.
Mm-hmm.
How much I'm gonna, if I buy it for this and I build it for that and sell it for that, will it stack up?
Yeah.
I'll be like, the only advice I would be giving someone now is just start with numbers
Start with the numbers and work back from
first.
there.
If it works, then you can check all the economic background. If
Yeah.
it's good, then you go ahead. But if it's
Yeah.
not, then that's your red flag.
Yeah.
But
Okay.
if you do all this research and then you go into our numbers actually don't stack up. you wasted so much time on the background.
Now, so if someone's getting into developing and they're running some numbers, you mentioned a very, very common thing at the start of this podcast, which is numbers don't stack up because
Yeah.
either they inflate the sales because they're expecting that it's going to sell for 30% more than it will actually per unit, or they bring down the costs exponentially because they're not taking into consideration all the smaller details and all the little costs that are involved in developing. Um, how and where would someone get information to help them be more sort of realistic with those numbers in their first development?
Okay. So when I would like to combine that your second question and coming back a little bit to your first question on my
Sure.
first project. On my first project was 3 townhouses, and I did that as a joint venture with another developer. And we look at the numbers as they were selling today, and that's the only basis I'm making my decisions on, what it's selling today for.
Gotcha.
And I look at comparables, what's selling today. I don't put in any market growth on this and that. Yes, I'm missing out on a lot of deals, but man, to be honest, even going on the numbers it's selling today, still not the easy job to pull it off. Because knowing what happened in the last 3 years, it was just roller coaster like that. You buy here, then the bill costs go there, then the prices drop, and it's like, oh my god, it doesn't stack up. Then it goes, prices go up. Oh, it is stack up, and then you start to build, and they drop again. I was like, oh shit, I missed it.
Yeah.
I should have shifted by 6 months.
Yeah.
And that's all. And that's how it looks like developers catching up their tails. In the last 3 years, missing up these curves, and
it keeps changing.
Yeah, bringing that product at the bottom of the curve, just because it's changing so quick. Before it was like a little bit steady, whereas now it's like bang, 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 and
Yeah.
Unfortunately, so coming back to that is just really getting your resales right. So because in the development, what are the 3 costs you have to worry about? Purchase, build, sales. If you stuff everything else, you're still winner. You stuff up one of those 3, you're a loser. Doesn't matter how perfect the others are, because all the soft costs, they're not the big percentage of the project, whereas this acquisition, build, and resales, they're the biggest, the most important numbers.
Okay, so awesome. So you would, for instance, for the resale value, you would sort of consult local agents or to get a price, or you would do market research to see what properties around have sold for recently, and is that sort of how you'd get that?
Yeah, I will get my own idea first. I just want to kill the deal first as quick as possible. So I'll get my initial thoughts first. Then I'll reach out to 3 agents and get 3 appraisals. The important thing is, if I do my own sales investigation, I want to compare that. I want to choose the product that I'm decided to deliver and compare the prices to this product, compare the features. And then then I will go to 3 local agents and ask them to give appraisal on that particular product and see where their appraisals coming up was mine. So it's like a bulletproof. So I've got my own idea.
Multiple different information.
At least four people, including me, having a go at the resales prices. Build cost doesn't really change much.
Yeah.
It doesn't change much as long as you know how to work it out in the first place. If you don't, then you'll be finding yourself really confused, because the square meterage rate is so high that we're talking about. Let's just say $3,000 per square meter. You're adding the bedroom with the ensuite. Let's say it's we're talking about 20 square meters multiplied by 3,000 as absolute minimum. That's $60,000. You're doing development of 6. That's $360,000 in cost. You're taking your project on the slope. Each retaining wall is $50,000. You do 3 meters.
Yeah.
Great. 3 retaining walls, $150,000. Now you all of a sudden you add 360 in your build cost by adding the extra bedroom or extra 20 square meters or extra living that no one wants to, and then you're building on a 3 meters, slope, which three retaining walls, which cost you 150. Now you're
Yeah.
500, and then you said, oh, you know what? If the valuation comes at 1.5 to 1.7, I'm pretty sure it's going to grow by 10%. So I should put 1.7 because someone
Mm.
gave me that appraisal, and then all
Mhm.
of a sudden you're selling for 1.5,
Yeah.
and you sell. What are you for selling 6?
Mm.
That's 1.2 million,
Yeah.
and then 5 million in bill cost. That's
Yeah.
1.7 million, and your projected profit is 1.5. Now you're losing $200,000 in the
Yeah.
blink of an eye.
Yeah. So, so yeah, far out. By the way, do you use the same builder?
No.
Okay, all right. Because I was wondering,
Different.
like, you'd have to work very closely with a builder and the
Or you
trades.
have to make too many mistakes.
Yeah. Okay.
Or you have to do too many projects or have done too many projects in the past. So you learn from each project
Yeah.
one thing, and then you say, or if that, or that bite, that I got that buy from that project, and it's like 2 retaining walls, $100,000. Okay,
Yeah.
this one looks like the same slope.
Yeah. Right.
Okay, all right, so it's extra $200,000. Like,
Yeah.
should I really get that 4-bedroom townhouse, or is there many 4-bedroom townhouse in the area? No, it's all 3. Oh, maybe I'll just cut it off.
Yeah.
I don't want to. I don't
Yeah.
want to. Maybe I spend this money on a better flooring.
On something else. Yeah. Have you ever had a project just go without a hitch? Like, no issue, or does every project have its own unique challenge?
First 2 projects were really challenging to start with,
Mm-hmm.
but for some reason they were just good. Like they
Okay.
were really challenging. It took a lot of planning, a lot of back and forth and preparation stage. But once we really lodged the A, yeah, no hiccups. And then from that one moving forward, um, the most of the projects I have was the builders.
Mm-hmm.
Yeah,
Yeah.
the variations, missing stuff. That's something that I probably everything that I do, try to reflect on me first,
Mm-hmm.
because it's easy to point the fingers. Once you
Mm.
point a finger at someone, 3 fingers pointing at you.
Yeah. Exactly.
So
Yeah.
if
Yeah.
something like having conversation with the builder or having good preparation,
Yeah.
have good documentation for the builder. Because people say, oh, I don't need an interior designer. It's just builder's going to do it for me. And then, it's basically having all the documentation is kind of bulletproof. So if someone already looked at it, someone created design that may or may not work ideally, but at least it's not a stuff up.
Yeah.
It's something that has legs to start with, and then builder may approve it, or it's hard for him to stuff it up because it's already created for him.
Yeah. Yeah.
Things like that, extra reports here, extra reports there, making sure, documentation, construction documentation. So many people say, oh yeah, we got approval, and then they sign a bill contract, and the schedule 5 for the contract, they just put the wrong drawings
Yeah.
or not updated ones.
Yeah. Yeah.
And then it's best if you have argument with the builder during construction about variations, this and that. That's half of the trouble. The biggest trouble is when you finish it and prior certifier comes in for the final inspection. It's like, oh, the windows is not there.
That's different. Yeah.
No, like this is the documentation I had, but this is approved. That's the next revision. So this one is within 1.5 meters from the shower or something like that. Or now I have to do that. That's this things like easily to be fixed. But
Yeah.
some things you can go to section 455. Development approval, get the amendment to development approvals. Yeah, stuff like that. Or you miss out, on your Reiki roof and there's no space. Or you decided I want to do Reiki roof. You kind of your architect, designed the Reiki roof or flat roof, and then you as interior designer say, oh, let's do the Reiki roof. It's going to be amazing, and we've done all that. And then if builder missed out on this or was too busy, and then he had the project manager on site, they did the rake roof, and it's like, yeah, great, where we're putting air conditioner now.
Yeah.
And everyone like, oh yeah, not only air conditioner, sleeves and this and
Is
that.
there any businesses out there that can just do all in one? So that, because it sounds, when you've got sort of multiple different people sort of trying to work together and there's mistakes being made, is there any sort of in-house all together construction that does all the interior design, architecture, drawings, construction?
Look, I haven't tried designing construct.
Mm-hmm.
I haven't designed that service, but I would say was what the experience that I had before. There are some builders who ask no questions and get things done. And if
Yeah.
they see something is wrong, they just fix it.
Yeah.
And they know the building National Construction Code and Building Code of Australia rules, so they know how to fix it without sending multiple RFIs, because they just don't know how to fix it,
Yeah.
because they're not knowledgeable enough. But if you design and construct, you absolutely know the knowledge, or you have someone in the office who knows because they design it, so they can fix that internally.
Okay.
So that's my assumption. But so far, probably 50% of the builders, if they don't have someone with architectural degree or drafting degree in the office, then I would find it hard to
Sort of work.
work with. If you just bring in that builder
Just the building
from outside and you have all the drawings and they don't know the background of these drawings, then you are the person
who's responsible for
as you're the joint, unfortunately. And then
so with you mentioned your first one was a JV, it was a joint venture. There's a lot of people who sort of think that property development is only reserved for the extremely wealthy, people who have got lots of money, people who've got a good amount of maybe equity in a property that they can use to leverage for a development. What would you say? Is there truth in that, or can someone who's got a good idea and a willingness to learn, can they get into property development, or is it something that's just, unfortunately, it's just you need to have a good amount of capital?
I would say this way: having good amount of capital doesn't mean you'll finish it off positively.
Yeah.
So I don't think the money is a determining factor. I think it's your skills of bringing people together who know what they're doing. So I think the person who knows how to bring the team together has a better chance to go ahead than the person who's got the money and trying to do everything himself.
Yeah.
Because if it's like doing the startup, like you think but all the knowledge in doing. So if you have a deep pocket, so you can somewhat, have a buffer to things, then no problem. And you use that as your play field rather than I have to get it done or I'll go bankrupt. If in that case scenario, better off just not to, and then go to construct your design and construct company, or go to the project homes, and work with them because they have a team, they have a design, they kind of done for you. Like, don't really deviate too much from the project home builders, but maybe using the same companies that would be doing duplexes. Just start small, I guess.
Start small.
Yeah,
Okay.
I think not the money. Money would I would think it's initial thought for the people, but for me, looking backwards, money is a secondary.
Yeah.
Because you only have money first project. When you lose it, you don't have it anymore. But if you learn somehow or bring people together, or know how to bring people who will not let you down, and use that as insurance, pay them more money, and the chances that instead of making 100% the profit, you share your 20% project profit to the people who to really good quality people who will look after you. you kind of cement your 80% of profit or 60% of profit, or even the 50% of profit, and
Mm-hmm.
learn from this rather than, aiming for 100% profit in the meantime, choosing
Lose all
wrong,
your money.
lose all your money, or
Yeah.
yeah. It's
So
hard to, yeah.
natural follow-on question from that then is then how do you find well, I know there's I'm a member of a few Facebook pages for developers and stuff like this, and one of a common question I see on one of those Facebook pages is people asking for, hey, does anyone want to, joint venture with me on a project, or hey, can I, does anyone know anyone that can, help me out with this particular project? And I see sort of varying degrees of responses. Sometimes people are helpful, some people are not. How do you find someone if you come from like a humble means, humble family, there's not enough, maybe not, you've got maybe a little bit of cash saved up or a bit of equity, but you think maybe I want to partner with someone with experience. Where do we start?
Look, my approach is not a hard sell. My approach is I'm sharing my journey over social medias for the last 5, 6,
Mm-hmm.
10 years.
Yeah.
So you work hard for your name, and their name works hard for you.
Mm-hmm.
So people, maybe they don't know me personally, they kind of know what I'm doing, the lessons I share, the problems that I get, and how I solve them. So I don't have a quick fix for you,
Mm-hmm.
unfortunately. I don't think anyone has that quick fix. Your quickest fix is your parents. That's your
Family,
quick fix.
friends. Yeah. Yeah.
That's a
Yeah.
quick fix. Quick fix. Other than that, then the next step is reputation.
Mm-hmm.
So I don't have the answer for you how to quick fix things. I don't think
Yeah.
there's a quick fix.
Mm-hmm.
Yeah. So
Yeah.
you
No, fair
either
enough.
you either have a really good project, really well laid out,
Yeah.
planned, and have a good information memorandum. It really shows it stacks up and it's professionally prepared. You have a broker like you to help to structure finances. You have a builder you connected with somewhere, maybe on your friend's party or something like that.
Yeah.
You can really break down and prepare some estimate build costs for this project.
Yeah. Okay.
And have some real estate agents that can prepare some CMA, comparable market analysis for you, and they can kind of fix your construction cost, and you can fix your resales, and then you really have a good business plan. And
Yeah.
then people will just come. They don't really care about you because you kind of detach yourself at this point from the project. You just prepared a really good business plan that's going to work with or without you.
Yeah.
So
Yeah.
I
Fair
think,
enough.
yeah, I think
That's
that
good
would,
advice. Yeah.
yeah, so that would be, starting point. If you don't have family, then really prepare a good information memorandum.
Yeah.
Second one is your friend and family is like, let's do it. If it doesn't work,
Yeah.
oops, it stays between us.
Stays with the family. Yeah. Fair enough.
Yeah,
That's true. No, that's true. Now with funding, just talking about funding. So obviously you can get joint venture. Some people helping out, maybe putting some of their own capital in there. You put some of your capital. But banks, private lenders, sort of second tier, third tier lenders are also an option. I think I am sort of seeing a lot of people come to me, and I just want to get your thoughts on this. A lot of people come to me wanting to, do a knockdown rebuild, put up a few different apartments or sort of units or something like that, and I usually go down like sort of the capped interest private lending side. It's quick, easy, especially if they don't have experience. They're probably more likely to get approved with one of those lenders than CBA or Westpac or something like that, one of their property teams. But then when you sort of quote them the rate, there's sort of a big gasp. And I think a lot of people sort of still want a 30-year mortgage, do the knockdown rebuild with a standard investment loan with the bank and pay interest because it's going to save them a whole bunch of interest in the long run, as opposed to sort of a capped interest private lending mortgage. When it comes to funding, what's your position on sort of traditional bank finance versus sort of the private commercial type funding?
Well, the answer is simple. It's horses for courses.
Mm-hmm.
If you're on an average salary, you want to knock down a bit and build duplex with the current interest rate, your serviceability sucks. So before those two interest rates rises, what was the 42%
Mm-hmm.
of serviceability gone down? So if you were able to borrow, I know before 2 million, now you can borrow only 1.4. If you could borrow 1 million, now you can only borrow 600.
Yeah.
So the question for you, like, you want to do it, here are the tools, and that's what that cost you, and that's how much you make. Or you want to do, or you don't do it because you want to use the tool that's not appropriate.
Mm-hmm.
It's not gonna work, because if you can't borrow, you can't borrow, full stop.
Mm-hmm.
What are you talking about? You don't like the rates?
Yeah.
Go back to the drawing boards. Enjoy your
Yeah.
your old, falling apart, shack, and enjoy your life. Go fishing,
Yeah.
go travel,
Yeah.
and wait for interest rate to go down so you can afford that
So you can
interest
afford it.
rate.
Mm.
Yeah, it's simple like that. And from what I'm understanding at the moment, most of the population is capped at 1.3 million acquisition. There's a bit of stretch out with some other lands to 1.5. Once you go to 2 million, there's no main land at the
Mm-hmm.
moment.
Yeah.
So
It's that's no that's I'm glad you said that, because it's one of the sort of frustrating things coming from a broker. I'm very focused on solutions, and so I provide a solution for these guys, but it's because it's not a 5.89% interest only rate, they sort of go, oh, that's not what I'm used to, and I'm not happy with that. And then we sort of have to have that frank discussion that says, hey, look, number one, you need to to manage the repayments on this over an 18-month 2 year period while it's developing, can cripple someone. But secondly, you might not have the borrowing capacity, whereas there are a lot of lenders out there that can give you the funds you need on a good feasibility, good IM, and they give you the funds you need and very quickly, and you get the project done, as long as you bake that into your overall costing, which you mentioned. That finance has to go first, and that's probably what some people don't do as well in those numbers, is put in the
yeah,
interest amount that they're expecting, or they think that the development's going to take 3 months to do, and they think that they put in 3 months
yeah.
worth of interest.
Well,
So
it's just basically, just to give you comparables, you staying in the middle of the desert, you can see a caravan with the camels, you know, going past you, and they said, "Oh, do you want to jump on board, and we'll get you to from A to B?" Said, "No, no, I'm waiting for the taxi. I only take taxis. I don't take the caravans." So these are those people who wants to build
yeah, I know what
5.9
you mean.
interest
Yeah,
for 30 years, and they're just missing out on opportunities one caravan after another,
yeah,
just waiting for their taxi.
yeah. No, absolutely. No, 100%. Now, how much? How much? I've also seen when people doing developments that they over leverage, which can be sort of an expensive mistake to make, where they might not have the upfront cash, and so what they're using equity from a property. So really, they're getting the private lender or someone covering 100% of the sort of construction costs. Now, there's sometimes still a bit of profit in there, and they can make a bit of profit, and maybe it's a good way to start. But should there be a cash injection to either reduce interest, increase the profit? Is there a risk of over leveraging a development
Look, I don't know
project?
if that's the answer you want to hear from me as a broker.
I want to hear the honest answer.
The honest answer, look, if a person comes to me and said, "I've got the paid off property
hmm
and I don't really work anymore. I really just do casual hours just to, get some money for my holidays. I'm making 40,000, but I don't really spend on anything. I don't have a mortgage or anything.
hmm
But look, how about I take 650 out of my property
hmm
and we go and buy development site
hmm
with second tier lenders."
hmm Yep.
And then I would say to these people, 10 years ago, I would say yes. Now I would say no,
Okay.
because I don't want you to see on the street, with that, paper saying, "Please, I want to eat." You know,
Yeah.
that's my take on this. Because
Yeah.
some people really crazy too early. Some people just they just don't know what they're taking on,
Yeah.
or it hasn't been properly explained to them.
Hmm.
I don't know.
Yeah.
That's my view.
Yeah. No, fair enough. Yeah. So I guess, can I ask, you said previously, maybe 6 years ago, you'd probably say yes, but now you wouldn't say, you'd say no. Why 6 years ago you'd say yes?
Because I didn't know what I know now.
Oh, okay. Fair enough. Fair enough. Got you.
I
Hard
haven't
to say.
seen enough projects go different directions
Hmm.
with the same expectations at the beginning.
Hmm. Yeah.
Yeah,
Yeah. No, fair enough. I think it's I look, I generally see that, and I see, when people do have, yeah, like an unencumbered property or an encumbered property, and they sort of say, let's get a mortgage on that, and we'll go to a sort of a private lender, and even we'll get a development mortgage using that. When I see them sort of over leverage, um, there's always a stress in that price and that margin. Like a lot of private lenders, want probably about a
yeah,
10, lowest would be a 10%, profit margin. And that 10% starts to look a bit shaky once you start over leveraging. And you mentioned before with the market going up and down,
exactly.
just you're taking on a lot of risk. And so, yeah, no, I'm with you on that one. I think that's a good idea. I mean, we do that often, and if there's a good project and the numbers stack up, we never say to someone, no, we're not going to do it. And it's a very common way for people to get into it, to get their first profit,
Yeah,
to leverage. But yeah, you definitely want to manage that ongoing. Now, you talk about staying up front. I'm conscious of the time, so I won't. Just a couple of additional questions, but you talked about standing on the street with I need a can of food type of sign, and which is a question I get asked a lot, that I generally don't answer because it's not usually something I have a conversation with even my clients with. And so I wanted to maybe have that conversation with you, which is, um, if you're a full time developer, um, from the time the development starts to the time it finishes, where's your cash coming from? Where's your lifestyle income? Because the lenders don't fund that. They're not going to
yep,
fund,
yep.
your grocery shop. So,
So the reason why you're standing with your sign on the street, it's not because you were asset poor. It's because
hmm,
you were cash flow poor.
hmm,
It's not about how much money you have. It's how much, or you have someone. It's how much money you need to pay now to avoid, something else.
yep,
So people with these signs, they not most likely they were not asset poor. They were asset rich but cash flow poor.
hmm,
So,
yep, yep,
so if shit hits the fence, usually cash flow, not the assets.
yep,
So they don't have enough time to sell the assets quick enough to pay something that is pending, or couldn't sell the assets because they didn't
hmm,
have time. So, or couldn't get the price because in this particular, because of that emergency, they had to let it go too cheap. And then,
hmm.
that, yeah.
So, how do you cover your lifestyle as while it's still being constructed? You haven't sold anything, um,
Well,
but you know,
by stage, the thing is, the first answer would be you have to go to a level when you have multiple projects to sustain yourself. So
hmm,
it's you're not working on one project, you're working on a multiple projects. So your payday is coming in
hmm,
more frequent and different times. And
yeah,
also, what I'm doing, the buyer's agency is also helps me to do cash
yeah,
flow.
yeah. Okay,
So it's
gotcha.
coming back to Kiyosaki. Your business, has to
Love
fund
Kiyosaki.
everything.
Mm.
So
Yeah,
that's my answer to that.
yeah. No, absolutely. I think that's a great answer, and I think just shining the light on that's really important because I think a lot of people do the feasibility, they see that end profit, $2 million, they're cheering, they think it's great, and so, but they don't think that between now and 24 months time, how are they going to do their grocery shop?
Yeah.
And I've known some people who have quit their job to start developing, and thank goodness they've been able to be successful, but it's been a struggle during that phase, because
never ends, never been easy. More money needs more energy.
Yeah,
If you don't generate energy, you can't be resourceful. Then it's only one way.
Yeah, no,
It's
absolutely.
not if, it's when.
Look, I think I've sort of gone through our discussions. We've gone through
Yeah.
a lot of the questions I had planned to ask. So I'm really grateful for you to come on. I guess what I'd like to ask is just at the very end, if you had one piece of advice for someone who is watching this and going, I want to be a property developer, regardless of what stage they're at. What's the one piece of advice you'd give them?
Team, cash flow, taxes. Watch all three.
Okay. Love it. No, brilliant. We'll finish on that. I appreciate it so much, Andrey, and I hope maybe have you on back again sometime.
Thank you, Kiran.